Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. The GIFT Nifty is trading lower this morning, which is indicating a start in the red for the Indian markets. The Asian markets are also weak, tracking global markets where Hang Seng and Nikkei are down around 1% each. Talking about the US markets, the US futures trade higher after cash market ended lower on Wednesday. Dow and Nasdaq did snap 9 days winning streak, falling around 1.3% and 1.5% respectively. The S&P 500 recorded worst day in 3 months after ending 1.5% lower. All 11 S&P 500 sectors closed in red, the decline led by consumer staples. Talking about stock-specific move, Micron Tech jumped 4.4% on better than expected Q1 results and strong guidance. US 10-year yield hits lowest level in 5 months at 3.85% ahead of GDP data. The energy pack, Brent crude did fall to $79 a barrel on unexpected rise in US inventories and West Asia ceasefire action. The UK's November CPI is up 3.9% on a year-on-year basis versus estimate of 4.4% rise. And last but not the least, the bullion market, gold prices did fall and dollar index is steady at 102 mark. So clearly one can say that this is a weaker sentiment which is being seen for the global markets, and don't forget that the domestic markets also did see a lot of volatility and concern in the yesterday's session. So be very cautious while you're trading during the day, as it's a Thursday and a weekly expiry day as well. So this is how the global sentiments looks like. Let us now take a look at the trade setup for the session today for the Indian markets. Of course, we have to take the cues from what happened yesterday, and yesterday was a very difficult day for the market because the market finally caught into the much awaited major profit booking and lost more than 400 points from its record high. Touched in the morning session on December 20th, that was the yesterday's session, despite the positive mood and global counterparts. The Nifty 50 is likely to take support at around the psychological 21,000 mark in the profit booking, and 20,800 is expected to be a crucial support area, whereas it may face resistance at the 21,200 to 21,400 zone, and 21,600 seems to be the top for the time, as we see that clearly these are the important levels one needs to consider. But one needs to understand that the overall market sentiment is still positive and remain consolidative unless its decisive break 20-day EMA, which is nearly 400 points away from the Wednesday's closing, that is the yesterday's closing. So yesterday, as we did see, Sensex did fall around 900 points, to be precise, 931 points to close at 70,506, while the Nifty 50 tanked around 300 points. And of course, there was a lot of bearish action seen during the session and a lot of volatility towards the downside, a profit booking phase which was witnessed in the markets. See, one thing is clear that this is a negative signal for the near term at least, and it also implies that the Nifty has now entered into a short-term downtrend mode. Of course, we have to consider that volatility has started showing off into the markets at present. The Nifty could play down towards the next major support at around 21,026 to 20,769 level in the coming sessions, and any pullback rallies could find resistance at 21,325. Looking ahead, there might be a consolidation phase for the Nifty in the near term. The broader markets hit badly with negative breath. The Nifty mid-cap and small-cap indices corrected around 3.5% each, and we did see a lot of negative action coming in, and the broader markets were also not supporting the markets during the yesterday's session. The fear index, India VIX, also jumped further, rising around 4.2% to 14.45 from 13.87 levels, which made the bulls uncomfortable at higher levels. So this is how the scenario, the picture for the market looked like yesterday. Now, taking the cues from there, let's take a look and understand as what the support and resistance levels would look like for both Nifty and Bank Nifty. For Nifty, it is likely to see immediate resistance at 21,470, followed by 21,589 and 21,783 levels, while on the lower side, it can take support at 21,084, followed by 20,964 and 20,771 levels. Taking a look at Bank Nifty. Well, yesterday Bank Nifty also traded similarly to Nifty 50 and lost more than 700 points. In fact, bad. It was worse than Nifty at least. And Bank Nifty did see a downtrend of around 700 points to close at 48,166. The index closed within the strong positive gap created on the 14th of December, if you remember, 47,445. It was down 426 points and formed a long bearish candlestick pattern on the daily time frame. The immediate resistance for the index is situated at 47,600 and 47,700 zone, and a breakthrough above this level could pave the way for the further upside targeting 48,000. However, again, the overall sentiment remains bearish for Bank Nifty, suggesting a cautious approach with a preference for selling on any upward movements. The Bank Nifty is expected to see resistance at 47,973, followed by 48,200 and 48,568, while on the lower side it may take support at 47,237, followed by 47,000 and 46,641. Let's quickly take a look at all the stock-specific news, stocks in news, and there's a long list today, as there's a lot of action happening into the stocks market, particularly the stock-specific world. We start with Inox India. The cryogenic tank manufacturing company is set to list its equity shares on the BSE and NSE. The final issue price has been fixed at 660 rupees per share, and clearly it is expected that the listing premium is in the range of 75 to 80% over the issue price. We'll see what happens during the day today. The next stock in focus would be Mazgaon Shipbuilders, as a state-owned shipbuilding company has signed a contract worth 1,600 crore with the acquisition wing of the Ministry of Defence for the construction and delivery of 6 next-level generation offshore petrol vessels for the Indian Coast Guard. Keep an eye on Cochin Shipyard, as the public sector undertaking company has signed a contract worth 488 crore with the Ministry of Defence. The work package includes repair and maintenance of the equipment and systems on board the naval vessel. UltraTech Cement is another stock which one needs to keep an eye on, as the country's largest cement company has entered into a share subscription and shareholders agreement to acquire 26% equity shares of CleanMax Terra for around 20 crores. CleanMax Terra is engaged in the generation and transmission of renewable energy. The next stock in focus would be a BSE. The SEBI has granted its approval for the appointment of Pramod Agrawal as chairman of the governing board of the stock exchange with effect from 17 January 2024. Mr. S.S. Mundra, chairman and public interest director, will be ending his term on 16th of January 2024. The next stock, in fact, two next stocks are from the banking space. We start with ICICI Bank, as the Reserve Bank of India has approved the reappointment of Sandeep Batra as Executive Director of the bank with effect from December 23 to December 22. This renewed term of 2 years is within the 5-year term as previously approved by the shareholders. And last but not the least, keep an eye on Karur Vysya Bank, as Rajesh E.T., the current chief of Integral Vigilance, has been transferred to the Inspection and Audit Department to manage and develop the department's software application effective from 3rd January 2024. Hence, Arjun Raj will take charge as Chief of Internal Vigilance of the bank effective from 3rd January 2024. Further, the bank has decided to surrender its certificate of registration as a merchant banker. So these are all the stock-specific action. Keep an eye on banks and financials. Keep an eye on state-owned shipbuilding companies like Mazgaon Dock. One needs to have a look at the platform stocks like BSE and the exchange, of course, and the cement players, as there's a news flow coming in from the country's largest cement maker, UltraTech Cement. So these are all the stocks in news. Let's quickly take a look at the FIs and DIs action. The foreign institutional investors net sold shares worth Rs 1,322 crore, while domestic institutional investors bought shares worth Rs 4,754 crore on 20th of December. So this is clearly how the trade setup for today looks like. Of course, one needs to understand that there was a lot of volatility and a lot of risk seen in the market yesterday, and we of course have to take the cues from there and be literally very cautious while we trade in the markets, as of course it's a Thursday and it's going to be a weekly expiry, so volatility again is anticipated. With this, we come to the wrap of our podcast session for today. Nevertheless, irrespective of the market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.